Hi, and welcome back to the Independent Investment Banking course. This is lesson 13, aligning strategic alternatives to sponsors. And so we've already touched on that in a previous conversation, really getting into the solution mapping aspect of investment banking, where we've done some discovery or needs analysis. We understand where they are now, where they're trying to go, and now we can start coming up with alternatives for them to help them close that gap to be the solution or solution mapping to the problem. So we're going to hop right into it. So, introduction to aligning strategic alternatives, the crucial role of investment bankers in identifying growth opportunities, maximizing value, and creating competitive advantages by analyzing strategic alternatives. So they leverage expertise in financial analysis, doing the quantitative aspect of modeling out these alternatives and the implications on the existing financial statements of the organization, and seeing whether the option is accretive, dilutive from an M&A perspective, if it's a strategic, or if it adds value, or what the return is, etc. And so we have a lot of different quantitative metrics that we can lean into to help generate those insights, to help them make the correct decision. But at the end of the day, we need to assess the financial impact of the alternative. So we've already talked about defining the objective, understanding the enterprise's goals, assessing their current position, where they're trying to go, their strengths, weaknesses, market share, competitive positioning, etc., and the impact of a potential transaction on their financial statements. So we need to set clear objectives in terms of enhancing shareholder value, being able to value that value and model it out and see what the implications are. So we do that comprehensive assessment. It will be quantitative, but oftentimes it would be a strategic aspect as well. We need to make sure that their algorithm, will win, in the marketplace in terms of delivering a solution or solutions. And so we do some sort of a SWOT analysis, etc. When we're talking about evaluating strategic alternatives, we're identifying strategic options such as M&A, joint ventures, divestitures, strategic partnerships, organic growth strategies, and each alternative is considered for its potential to meet the company's defined objectives and the best use of that capital. We need to do a risk assessment as well and show the financial impact through financial modeling and scenario analysis to see what the financial implications are of a given alternative. Once we've modeled out and done the quantitative aspect, we need to develop a pitch book for capital sponsors. And what that ultimately is going to mean is it's going to mean this is the alternative. Here's the impact that it's going to have. Here's what we see envisioning happening. Here's where you're trying to go. You've told us that you needed to accomplish XYZ, deliver XYZ returns to shareholders. Here's how we're going to do that. Here's an option to do that. And so it's going to include market insights, financial projections, detailed analysis, risk mitigation. We're trying to win that business as an investment banker to implement that alternative. So it's a collaborative approach in terms of defining the objective, of co-authoring that solution in terms of long-term alignment, and getting the key question answered, such as what are the desired outcomes, constraints, limitations, risk appetite, all that good stuff. In terms of conducting a comprehensive assessment or in-depth, we're talking about financial statement analysis. We're talking about industry and market research, competitive landscape and evaluation. And when it comes to evaluating strategic alternatives in a little bit more in depth, when we're talking about M&A, it's evaluating M&A opportunities, including target identification, synergy analysis, integration planning, analyzing the strategic fit and financial impact of potential acquisitions or mergers. Also, looking at joint ventures and partnerships, what the impact of those would be from a financial standpoint, organic growth strategies such as entering new markets, launching new products, etc., and then capital restructuring in terms of being able to raise equity or debt financing to support the strategic goals. So when we're talking about developing a pitch for capital sponsors more in depth, we're creating that persuasive argument by generating insights from a quantitative perspective and saying, hey, this is the best use of your strategic capital and this aligns to your long-term goals. And we should be able to, we are best positioned to win that business and actually implement that alternative for you. So it's going to be target market and competitive positioning that's outlined as well, financial outcomes and risk management. And then ultimately, when we're talking about aligning strategic alternatives to sponsors, just wrapping it up, we're defining the objectives, conducting a comprehensive assessment, evaluating alternatives, and making the case that this is the best alternative for the strategic use of capital there. So hopefully this was helpful, guys. We're going to stick with it. There's over 90 lessons, and stay tuned.